It's another big day. So I don't know how many of you managed to sit on the live stream, but there was indeed on YouTube, in fact, a live stream of the Senate committee hearing for the gas tax proposal. So there's been a lot of talk about, like with this Strait of Hormuz business, with this Iran war business, there's a whole bunch of talk about these gas companies now making super big profits. And so a couple of people fronted up to the Senate, the Parliament, and they had a chat about gas tax. So I think that I didn't listen to the whole thing. I think it was when I logged off, it was 3 hours or 4 hours. It was still streaming at 4 hours. I only watched probably these first two blokes have a chat, at which point I sort of got the gist of how it was going to go for the rest of the 4 or 5 hours that it was going to continue. I can see this guy is this punters politics guy. He's definitely trying to have an Aussie shtick in terms of calling people punters. He's obviously there's a bit of a character or something going on here, but I don't know, man. There's something about being Aussie which is fucking cringe as fuck. But at least he's in here. I think his approach, or these first two guys that were at the start of this, it was I think it was the CEO for the Australia Institute or something like that. He's an economist, and then this punters politics guys, and I don't think that they were making a fairly measured argument that was they're not against gas, they're not against drilling, they're not against companies making a profit, but that on top of the current company taxes, income taxes businesses pay, there should be a standalone, I guess you would call it, export tariff on resources, and particularly gas resources that we send overseas. So let's cruise through this article, and I'm hoping it'll summarize a little bit of what the fuck this discussion is all about for us. At that point, you can probably read a few companies' financial reports and get an understanding of how much tax these guys are paying and what tax these guys are paying. Because I get the impression that people think that these companies pay $0 in tax, when in reality, they probably pay a reasonable. They're probably paying less than 30%, would be my guess, company tax rate. But we'll dig into some of the guts of these annual reports. Righto, here we go. Labor under internal pressure on gas tax as influencer says government stopped working for the punters. So for our international friends out there, punters is an Aussie slang for folks. It's that interchangeable. It's the man on the street, the folks, the humble folks, FOLKS. So it's an Aussie version of folks, punters. A punter is, I think it's canonically, it's a gambler, someone who likes a bit of a gamble. And so then it would be, the average man versus, when you're talking about your bookies or your punters, right? You're running the book, or you're a punter. And it's the punters are the general people. Righto. Parties Environment Action Network tells Parliamentary Inquiry into Gas Export Tax to consider very substantial levy on windfall profits. Okay. The Albanese government is facing internal pressure to raise taxes on gas companies, as a prominent social media influencer warns Labor not to underestimate the scale of public outrage at the existing scheme. Labor's Environment Action Network used evidence. Labor's Environment Action Network. So this might be like one of those factions within Labor. We've learnt that there's a Labor left and a Labor right, so there's probably an environment caucus, I guess you'd call it. Used evidence to a parliamentary inquiry into the tax settings for the gas sector to encourage the government to consider a very substantial tax on windfall profits. We would definitely like to see a better return for gas resources, Lean's National Secretary, Janeline O, told the hearing on Tuesday, noting such a position was consistent with Labor's National Party platform. Yes, let's nationalise, motherfuckers. I would say that within the Labor membership, there is support for better returns to the Australian taxpayer. Thank you. Oh my God. This is why we vote for a Labor majority. Because there are people like Lean in Labor that can push the majority government towards higher tax outcomes for things like our resources. Let's go. The comments came as the Labor MP Ed Husick restated his support for a 25% export levy to end the obscenely sweet deal he claimed the companies enjoyed under the existing petroleum resource rent tax system. The Greens chaired inquiry is examining the case for a 25% export tax, which has the support of a broad coalition of politicians, unions and climate groups, along with other options to extract more revenue from the major exporters. The Ross Garnaut and Rod Sims-backed Superpower Institute is pushing, what a fucking dumb name, is pushing for a 40% cash flow levy, dubbed the Fair Share Levy, to replace the petroleum resource rent tax. 40% cash flow levy? Oh, that sounds kind of retarded. Ugh. I want to know what this, anyway, a 40% cash flow levy. Let's just have a think about this. Like, I want to know what they mean by this, because you can't just, there's no point taxing cash flow, because a two-way cash flow based, okay. Whoo, here we go. This is going to trigger me, I think. The explainer outlines how the proposed fair share levy would raise billions in public revenue without reducing investment, raising gas prices, or impacting jobs. The fair share levy is a two-way cash flow-based levy on the sale of Australia's gas resources, modelled on the system used successfully in Norway. Unlike conventional taxes that reduce a project's rate of return, This design takes a consistent share of both revenues and costs. The result, the ratio between costs and returns remains unchanged, meaning firms face the same investment incentives as before. In practical terms, the government acts like a silent equity partner, sharing 40% of both the risks and rewards. There it is. Projects that were commercially viable before the levy remain viable after it. The only difference is who shares in the profits. I'm not sure the government should open itself up to that risk. I don't think it's the government's business to put its capital nuts on the table like that when it holds all the cards in terms of access and restricting access to the resource. Why should they? Australia's gas resources belong to the Australian public. The fair share levy ensures more of the wealth they generate is retained domestically to fund essential services such as health, education, and housing, rather than flowing to offshore shareholders. Interesting. Okay. The government has been weighing potential changes ahead of next month's budget after tasking the Treasury with modelling a windfall profits tax and changes to the petroleum resource rent tax. While the budget deliberations are ongoing, Guardian Australia understands the appetite for major interventions has diminished amid the global energy crisis sparked by the Iran war. I mean, this is the time, right, when people are desperate overseas for our gas because Oman's shut down. Like, this is when we can do it, right? Let's get it happening. Senior Labor sources have all but ruled out a 25% export tax in the 12th May budget, in part to avoid antagonising the same Asian trading partners that Australia is reliant on for supplies of diesel and petrol. This is the global economy, ladies and gentlemen. Asked directly on Tuesday afternoon if an export tax was on the table, the Finance Minister, Katie Gallagher, said the government's policies hadn't changed, before noting Anthony Albanese's focus in recent weeks on striking energy supply guarantees across Asia. The opposition leader Angus Taylor said a 25% export tax would close down the gas industry. Bum bum. That's wrong. Wrong and false. And dumb and gay. And should be opposed, putting him at odds with Liberal frontbencher Andrew Hastie. This Andrew Hastie guy is coming for your job, Angus. And he's a little bit more, I would say, centre-right. From what I've seen, this Andrew Hastie guy is a little bit more centre-right than Andrew. So I think would have a little slightly greater success. Like, Angus Taylor is I think we said it before on Monday. He's the most mediocre politician in the history of the universe, but the Western Australian Labor Premier Roger Cook also opposed a new gas export tax. I understand that for many people it seems like an attractive proposition, but I don't think it would be good for Western Australia. And I've made those views clear to the Prime Minister. It won't change. People will always want to find a way to make money. And if Chevron doesn't want to make a few $100 million, then I would like to make a few $100 million, please. Like, if my if my margin is 10%, but my take home is $1 billion, give me the $1 billion, please. Supporters of a new gas tax have warned politicians on all sides that failing to respond to their campaign risks provoking a backlash from voters. But yeah, okay. Who are they going to vote for? Honestly. Angus Taylor has signalled that the Libs aren't going to do it, which means the Nationals aren't going to do it. And One Nation is full of crazy, insane people, and it was for a short period of time the party of convicted rapists. So who's going to do this? The Greens are also wildly out of step with the majority of Australians. This is, I think the only people that can get something through here will be the Labor Party, and even the Labor Party, people within the Labor Party are pushing for it. So I don't know if this is a matter of, I think it's just a matter of time. It's maybe now isn't the right time, but certainly I think later in the year, after they've released the tax budget and tax report for this year, I think it'll come up again. I mean, we've got to keep in mind, Albo's from the Labor left here. He's a hard left. Like, he would love to tax the shit out of these people. This is not something that he doesn't want to do, but he's obviously trying to balance. It sounds like it's, when we look at the petrol prices and the diesel prices at the moment, it sounds like he's cutting a few deals overseas, which is good. Interestingly enough, though, one of the interesting arguments that the good doctor from the Australia Institute, I understand they're very biased in terms of what they do, but I guess he was saying that the gas price is the price, right? So so long as there is enough delta between the production price and the sale price, you can take, you basically just need to take the 25%. You can take the 25% of the profit of the difference there, right? Oh no, were they talking a flat 25%? I can't remember. Anyway, keep reading. Goddamn. Here we go. Getting distracted. Supporters of a new gas tax have warned blah blah blah. Backlash from voters. Righto. Conrad Benjamin, the former school teacher whose punters politics venture has almost 1 million social media followers. I like the way that he framed it though. I've got 1 million social media followers. That's like 200,000 on 200,000 on YouTube, like 300,000 on TikTok, and 300,000 here and there. So social media followers across multiple platforms. So there's probably like double ups there. Which, not to knock him. I'm here talking to 0 people. Right? I'm currently talking into an empty void. But some people just know how to sell themselves, eh? Old mate told the inquiry that MPs underestimated the depth of public interest in the issue. Correct. I think there's huge support on the street for this kind of a thing. 1 million Australians following my content online. Now that's not correct. That's not 1 million. It's 1 million accounts subscribed to his several social media platforms, but that's cool. Bit of creative license, never hurt anyone. Watching someone explain gas isn't a success story. It's a symptom of a government that has stopped working for the punters who elected them, Benjamin told the hearing. just hearing someone use punters like this is like, and like what? It was, yeah. Anyway, I'm maybe just being a millennial. Everything sucks, right? The former Treasury's, yeah. Okay. Next, the former Treasury Secretary Ken Henry, whose submission to the inquiry advocated for a 100% windfall profits tax, issued a blunt message to the committee. 100% windfall profits sounds like the dumbest shit I ever fucking heard in my life. Just those words together in a sentence without any explanation sounds like the dumbest shit I've ever fucking heard in my life. There's 100% of any profit is unreasonable. Totally unreasonable. And unfair by any stretch of the imagination. So I have no idea what the fuck this means, but it sounds stupid. So this is our mate Ken. Just do it in the national interest. Just do it. And stop the crap that the Australian public have put up with for decades now in respect of the taxation of Australia's finite natural resources. Here's the guy. Australia Institute co-chief executive. Oh, they didn't even put the doctor on his name. They didn't even put the respect on his name. Dr. Richard Dennis said Australia must resist lobbying from countries, including Japan, pointing to new research that showed the country collected about $8 billion a year of revenue from its own tax on oil and gas and coal imports. So that was very explicit in the meeting. I remember that. Because this is something that's going to throw people off. I've seen people already get fucking confused on Reddit. So, $8 billion a year of revenue on oil, gas, and coal imports. And out of the gas that they import, Australia is only 40% of that gas. Right? So this is misleading. Don't get it twisted. This is fucking people love to fucking make shit worse and bigger and better than it is. This is wrong. Well, technically this is wrong because they've left out the coal part, but it gets even more wrong. If the Japanese are so worried about the cost of Australian gas and coal, they should scrap the taxes they are imposing on it. Interesting. Okay, so that's kind of where we're at. So, how much? Oh, I don't think I can bring myself to watch this. This might trigger me. Superpower Institute. Ross Garnaut. Okay. If I search up Ross Garnaut, am I going to find out that he's basically... Oh, here he is. Ross Garnaut is a renowned economist specializing in development, economic policy, and international relations. He is Professor Emeritus at the University of Melbourne and a Fellow of the Australian Academy of Sciences. His contributions to trade policy and climate change have made him a trusted advisor to successive Australian governments. Rod Sims, yeah, I've obviously heard the name before, Ross Garnaut. Rod Sims, I've heard Rod Sims before. I've seen him round and about. Holmes Court, yes. Familiar with the name. Susanna Powell. Not familiar with Susanna Powell. Mike Sanderford. Geologist. Not familiar with Sanderford. Cool. And then a whole bunch of scientists, economists, many economists, and collaborators. Cool. Righto. Damn, it would be good to go and get that doctorate. So, who do we start with? So we do have an offshore, a group of offshore, an offshore company. Let's think about. Oh no, that's not what I wanted. This one. And that's probably not even it. Right, Chevron Australia. Chevron, well known for operating Gorgon and Wheatstone. Okay, let's have a look. Oop, excuse us. Chevron, what we do. So, investment of $80+ billion in the Gorgon and Wheatstone natural gas projects, representing the largest single investment by a company in Australia's history. Together with our other activities, we are creating enduring benefits that will help shape the nation's economic future and spearhead Australia's growing importance as a global natural gas supplier. I'm willing to bet that this $80 billion is spread out over something like fucking 60 years, would be my guess. But that's okay. Like I said, everyone does a little bit of this and a little bit of that. Okay. Northwest Shelf Project, Wheatstone Project, Gorgon Project. So they're in the Northwest Shelf since 1984. So there's at least 42 years of operating offshore, which will come close, contribute significantly to that $80 billion. 40 years of domestic and international exports, 35 years of export. So it looks like they've got an LNG terminal, for exporting overseas. Some people on an offshore rig. Employs more than 1,000 people at the Crather gas plant. So they've got gas plants, they've got pipe, they've got oil and gas fields. Righto. Wheatstone. 8.9 million tons per annum of gas. I'm guessing that's liquefied. So there's an LNG hub. There's the Wheatstone field. Then the Wheatstone project onshore near Onslow. Doing a whole bunch of gas stuff. Cool. Then we've got Gorgon, another big gas field, where it goes through Barrow Island. Barrow Island I thought had a terminal. Maybe it's just an oil terminal. Maybe the gas comes back online onshore. Not sure. But there's, the Gorgon plant has 3 trains doing 15.6 million tons per annum of LNG. Super cool. For cool dudes. With a predicted lifespan of more than 40 years, I'm guessing it's going to be there for a little while. Cool. They're producing gas. Nice. Righto. Big projects, big company. They released this tax transparency report. Now, I know a lot of you are going to say, this is a report from the company. How can we, trust the numbers, blah, 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 blah. They are a company that is responsible in how they report. Not only will the ASX hold them accountable for what they're reporting here as being true, the ATO will certainly hold them accountable for reporting here what the truth here. So let's go. So Maggie McCourt, General Manager of Finance, put together a little bit of a introduction here. I'm guessing this is a big sell. Let's get to the actual nuts and bolts. Some more selling themselves of what they do. That's fine. Key highlights. Oof. Your tax questions answered. Do you include pay-as-you-go withholding tax installments for Chevron and Chevron Australia employees in your corporate tax calculations? No. Chevron Australia withholds tax on behalf of our employees in accordance with income tax legislation and makes monthly payments to the ATO. In 2024, over $200 million in PAYG withholding payments were made to the ATO on behalf of Chevron Australia employees. These payments are not considered corporate taxes and are not included in our calculation of company income tax or corporate tax cash payments. Is it included as an expense though? Does it reduce your deductible? I wonder. I don't own a business, so I'm not entirely sure. Cash payments. $5.1 billion in total corporate tax cash payments paid during 2024. The $5.1 billion is broken down as follows. So they paid $4.64 billion in income tax. Which includes some payments for 2023 in which Chevron's tax liability was $3.5 billion, and payments for 2024 in which Chevron's income tax liability was $2.9 billion. So there was some tax deferred from 2023 and 2023, because this is the 2024 requirement. Okay. Then we've got $159 million in royalties. So this is what a lot of people were talking about in the hearing, is that the petroleum resource rent tax, these royalties, etc. Oh, I don't even know if PRRT is the royalties. I think it is. I think they talk about it further down. But essentially, it's a fucking pittance in terms of this tax on the resource just itself. So they're still paying the normal corporate tax, but then, they're still making a fucking shitload of money. Interest withholding tax. Okay, so yeah. OP levy. Okay. Excise, right? Payroll taxes. Cool. And then fringe benefits tax. Righto. Over $2.9 billion for 1st of January to 31st of December, paid during 2024. So they paid $5.1 billion in 2024, but their actual tax liability in 2024 was $2.9 billion. So that's more important, right? Because ultimately you hope it all gets paid, but like annually, what do they require? What's their liability? I think is more important to understand. Corporate taxes, over $20 billion in corporate taxes paid since 2009. I mean, yeah, but we're gonna see that they earn also a lot of profit, right? So you earn profit, you pay taxes. That's how it goes. Too easy. All right, our approach to tax transparency. Chevron Australia is an advocate for tax transparency and adopted the Board of Taxation's Voluntary Tax Transparency Code back in 2017. In approaching our tax obligations, we comply with the letter and the spirit of the law, in line with our stringent global code of business ethics. Good on ya. Chevron still didn't pay any petroleum resource rent tax in 2024. How is this possible? Okay, so this isn't even, they haven't even paid PRRT. And I think this is the one of the arguments that everyone was making, is that it's basically no one's fucking paying this tax, this petroleum resource rent tax, even though so we're not actually getting paid for the resource itself. It's not like so they're basically just paying a corporate tax without, I guess you could say, what are they generating in terms of that, like, value generation. Like the value comes from the resource, I guess, predominantly, and there is some cost associated with extracting that. So I think the argument is really there is an inherent value that we should be, the resource that should be inalienable, and we deserve a portion of that value, no matter how much it costs to extract. The fact that it costs you to extract it, that's capitalism, baby. It's up to you to figure out how to make a profit and extract it, right? That's capitalism. That's how that shit works. This is, and I kind of agree with that sentiment. Like, this is my gas. I own it as an Australian. I believe you should pay me X amount of dollars for it if you want it. So after you get it out of the ground, you fucking pay me, and then it's you figure out how to make a profit after that. Cool. All on the same page. So the petroleum resource rent tax is a super profits tax, which means it is not payable until a project has recovered all of its costs and achieved a defined economic return. By design, the PRRT is not payable until well after income tax is payable and later in a project's life. At Chevron, we always expected to pay PERT once we recovered our initial investments in the Gorgon and Wheatstone natural gas projects. The design of the PERT has been critical in attracting investment in the development of Australia's natural gas resources. Australian gas projects demand substantial upfront capital investment over lengthy development timelines before production begins, resulting in prolonged periods of negative cash flow. By allowing all eligible expenditures to be recovered before the tax is levied, the PERT has encouraged investment in the higher-risk, capital-intensive gas developments that support Australia's security and economic prosperity. In 2024, the tax law was changed to introduce a 90% annual cap on PERT deductions. The changes was introduced in 2024. The tax law was changed to introduce a 90% annual cap. 90% annual cap on PERT deductions. The changes, effective from 1st of July 2024, mean that 10% of PERT revenue is now subject to 40% tax, resulting in a portion of PERT being paid earlier than would otherwise have been the case. Our first PERT payments were made in August 2025 and will continue from this point forward. Interesting. I don't know what those were. But this is about this report is about 2024, so there's no PERT reports. I believe there's no PERT reports here, so October. This represents, okay, anyway, let's keep going. We're almost there. Critics of your industry say that oil and gas companies pay next to nothing in royalties. Does Chevron Australia pay royalties? Yes. In 2024, we continued to pay royalties in relation to our 1/6 interest in the Northwest Shelf project. Prior to moving into the decommissioning phase of the project life cycle, our WA oil asset on Barrow Island also paid significant royalties, more than $1 billion over its life. Okay, fuck me, it's been operating since the 60s. Royalty payments from both of these projects are shared between the the Western Australian and Australian governments. Yes, because I think, Barrow Island is technically an onshore development. So West Australia and So the West Australian government gets its fair cut of the cheese. Whether a project is subject to a royalty regime or petroleum resource rent tax is generally based on the location of the relevant gas fields. Algorgan and Wheatstone natural gas facilities are supplied by gas fields located in Commonwealth waters. Exactly. So production revenues from these projects are subject to the PRT instead of royalties. Yes, because royalties occur at a state level. Is it true that Chevron Australia is going to receive a refund of royalties to pay for decommissioning of the WA oil facilities on Barrow Island? Woohoo! Chevron is committed to responsible asset retirement, and we take a proactive and planned approach to the decommissioning of oil and gas infrastructure that is no longer in use. In 2025, our WA oil project ceased production and moved into the decommissioning phase of the asset life cycle. While some decommissioning activities, such as the plugging of inactive wells, were undertaken when WA oil was operational, most of the work to remove infrastructure and equipment and rehabilitate the project area can only be done now that oil production has ended. Since 1985, WA oil has been subject to a profit-based taxation regime called the resource rent royalty. Like other profit-based taxation systems, the RRR regime requires project costs to be offset against revenue to determine profit. A 40% royalty is then applied to the profit. That's pretty good. I mean, that's all right. 40%, a flat 40 is pretty good. Ugh. No highlighty. Oh, fuck, I fucked up. How do I undo? There we go. No. Okay. No. Oh, God. Alright, why? No, stop. Now that it's no longer generating revenue, decommissioning costs cannot be offset and instead are recognized via a refund of previously paid royalties, equivalent to 40% of those costs. So they're only getting 40% back. This refund mechanism is not unique to WA Oil Australian projects and is a common design feature of profit-based taxation systems. Under the legislation that establishes the regime, the royalty fund is capped. Only decommissioning costs incurred in the first 4 years after production ceased can be considered in the calculation of the refund, even though decommissioning and rehabilitation activities are expected to continue well into the 2030s. The vast majority of the total decommissioning cost paid by Chevron and its joint venture participants will not be refunded, and no refund will be received before decommissioning works are undertaken at our own cost. Any refund received is treated as income and subject to company tax income. Oh, this is fucking good. Awesome. So what's happening is up until for the next 4 years, 2029, they're only able to claim this 40% of their costs up until 2029. How to explain? Yeah. So what this means, for the next 4 years, they can claim 40% of their abandonment and rehabilitation costs that they incur. But that 40% that they receive acts as income. And so then they have to pay 30%, or basically that has to be treated as income on their tax liability, which is pretty good. So we probably get about 30% of that back again as a government. So that's okay. That's not too bad. That's pretty good. And it's incentivizing them to fucking rehabilitate it quickly, right? Like, they're going to have to pay for it at some point. Alright, so the sooner it gets done, the sooner they get some money back. Everybody wins, that rehabilitated. All good, bro. The ATO publishes an annual corporate tax transparency report which contains the total income, taxable income, and tax payable of certain large companies. For Chevron Australia, the ATO's report relates to those dates. Yes. So, for the 2023-2024 financial year. Oh no, it's a calendar year. It's for the 2023 calendar year. Righto. As per the ATO, Chevron's disclosed. Total income of $19.43 billion. A taxable income. So, in total income, revenue minus expenses. Taxable income. Revenue minus expenses, $11.843 billion. Income tax payable, $3.5 billion. So that was in 2023. So it's a shame they're paying less tax this year on this report. Total income represents Chevron Australia's gross income for accounting purposes, which is revenue before any expenses are taken into account. Total income is not an indicator of the real economic or taxable profits of any organisation, as it does not include any expenses. Correct. Chevron Australia's income tax liability has fallen for the past 2 years. Do you expect this trend to continue? Income tax liability can vary year on year due to a range of variables such as production volumes, commodity prices, foreign exchange rates, and the amount of expenditure we incur each year to run our business. While our tax liability decreased from a record high of $4.2 billion in 2022, we remain one of Australia's largest income taxpayers. Like most businesses, we can't predict the exact amount of income tax we will pay. However, our natural gas facility is consistently producing at full capacity and achieving top quartile reliability. We expect we will continue to make profits and pay significant income tax for decades to come. You fucking better can't. Cool. Reconciliations. Let's go. So this is from the annual report for the year ending 31st December 2024. Income tax expenses. Okay. So current tax on profits for the year. Adjustments for current tax of prior periods. Total current tax expense. Deferred income tax. Current year deferred tax. Adjustments for deferred tax on prior periods. Total deferred income tax benefit. Okay, so they've deferred some tax. So total income tax expense was $1.863 billion. So where's this coming from? So profit and loss. So new reconciliation of income tax expense to prima facie tax payable. Okay. So the profit for 2024 was $7 billion. So the tax at the Australian tax rate of 30%, which is the company tax rate, $2 billion. Adjustment in respect of prior periods. So there's $5 million. Then we've got a non-deductible expenditure. Okay, foreign exchange gains. So they gained some foreign exchange. So gains. Resource royalty rent tax. So that was okay, because they pay this. This is a deductible. So because they're paying this money to the they pay this rent royalty to the state government, they're allowed to use it as a deduction on their federal tax liability. And then they got the PERT, resource rent tax, research and development expenditure. So obviously if you're paying this per, that's eating into your profits. So you're not going to pay 30%. Like, yeah, you've got to calculate your liability, right? And that eats away, that's like takes away from your profit. Research and development expenditure, cool, sundry items, righto. So when all is, here we go. So the following transactions occurred with international related parties: sale of goods, interest and financial costs, recharges of other related parties. So that's how much business dealings they had with international parties. That's fine, whatever. So here we go. Why do you deal with other Chevron companies outside of Australia? Is it to shift your profits offshore and reduce the tax you pay in Australia? Chevron Australia is an Australian company and part of a larger worldwide group of companies, ultimately owned by Chevron Corporation, that operate in numerous countries across the globe. We interact with Chevron companies all around the world as part of our normal business operations. When we conduct business with Chevron companies outside of Australia, we ensure our dealings comply with the arm's length principle, and Australian tax law is being applied appropriate so that the correct amount of tax is paid. Cool. So basically, profit for the year 2024, 7 bills. Income tax expense, 1.8 billion. So an effective income tax rate of 26%, which is not, I mean, it's not fucking crazy. It's really not. It's not crazy. Like, I would expect, fuck, like, it's not crazy, man. Like, it's just not like it. I just don't feel like that's a crazy percent. 26%. This is interesting though. I think they also have this effective rate based on the tax transparency code. So this includes their income tax rate, adjustments effectively for some of the resource rent taxes and things like that. And I'm unsure what this fucking transparency code company tax expense is. I have no idea. But I think this is sort of how it fits in. It feeds into their, we paid $4 billion in tax, which brings them closer to the 20, closer to the 30%. But I found this interesting. The worldwide effective income tax rate for 2024 was 35.5%. So what I'm seeing here is we are still incredibly low, well below the worldwide effective income tax rate, which means we could probably boost our company tax rate in Australia by 3% and still be competitive, which I quite like. If I think about 3%, that's an extra $200 million from Chevron. Thank you very much. So they're still paying tax. I mean, these companies are still paying tax. It is what it is. It's just not as much as people want. People want more. More tax. Give me more. Okie dokie. Well, that's me. That's it. This, I think, is about as far as we go. So I'm not against actually this 25% export levy on gas. I think it's a good idea. We should fucking do it. See how it goes. I don't think it's gonna, like, realistically, if I'm Chevron and I've earned $7 billion and after my tax I'm still pocketing $5 billion. Yeah, like, if I paid another 25%, what is that? Let's imagine in my head it's another $2 billion. Okay, then I'm walking away with $3 billion. Someone's going to want $3 billion, right? Someone's going to want $3 billion. It's crazy. How could you not want $3 billion? Anyway, all good. Catch ya on the flip side.